bet y'all didn't know that social media browsing and doing job searches online as well can bring down your credit score. So you may ask yourself, how could social media browsing impact my credit score? Well, it's called being a possible frivolous spender or a frivolous searcher. So what is frivolous? Frivolous is a person that is consistently searching or browsing or will possibly spend their money on items in the multitude that they won't get a return back on. And on the other hand, what credit bureaus would call it is being an uneducated consumer. So what are things that they would consider as being frivolous? Things like tennis shoes, clothes, searching for cars, what's gonna be the next J's that come out, jewelry, things like that, that most people won't spend their money to get a return on. So that's the credit bureau looking like, all right, so if I give him a line of credit, this nigga gonna go out here and blow it. Me looking at the things that he does on a daily basis as far as his searches, he's a frivolous spender or a possible frivolous spender. So no, I'm either gonna give him the least line of credit or I'm not gonna give him any credit at all. Job applications. You got Negroes that have had a mentality to go and say, all right, I'm on the grind, I'm finna go get me a job, I ain't lazy, I'm finna get online and I'm finna go put in these job applications. And you go in and you put in 5, 10 different applications and a week pass by and you don't hear from nobody. Then you go in and put you in another 5. Then within a week or 2 weeks times, you done racked up 10 to 15 inquiries on your credit report because you're not understanding or noticing that with these job applications, they're inquiring your credit, soft or hard pulls. So you're taking L's and not even getting the jobs a lot of times. So you want to be very, very strategic when it comes to applying to these jobs, when it comes to inquiring credit. Because when you get more than 6 inquiries or 6 hard inquiries on your credit report, that's telling the banks when it comes for times you getting a loan, getting a car, whatever it may be, that you're going to go bankrupt within 5 years. Why would I give this person some money or give them the opportunity? You feel what I'm saying? So when it comes to applying for these different jobs, go ahead beforehand and take a look at your credit score and go and print it out or download it of some sort and submit it in with your resume that way, and tell them with the note, hey, you don't have to go in and inquire my credit. Here's a current report right here. You can go off of this instead of you taking the hit. So that's the way you got to start going about things when it comes to jobs, because you racking up inquiries. I had a person comment on my post the other day. He was like, why you keep teaching us about debt? Credit is debt. Loans are debt. ERC is debt. Little he know it isn't. But he's saying that everything I'm teaching is about debt. But I'm saying at the same time, you have to understand, dude, and I know you've been on planet Earth in America longer than I have, to know that or notice that America is a debt wealth society. So if you haven't noticed, America is the richest country in the world, but we are the most country that is in the most debt. So it should dawn on you that when America isn't in debt anymore, we're not accumulating wealth. So it's a debt to wealth society. So when America is in debt, that means America is accumulating more wealth while they're in debt. So it's kind of the same game with credit. When it comes to the time, if you want to stride or excel past the conventional jobs that people with high school diplomas can get, you would tend to get an education, right? And when it comes with that education, you're gonna have to go and get a student loan or go in student loan debt to get the education, to get the diploma, to get the good job, right? And when it comes to going to that school to get that diploma, or driving to that school to get that diploma, or driving to work to make money to sustain yourself or survive while you're trying to get the diploma, you're gonna have to go and get a car. And the car is gonna come with 9 times out of 10 a car note, which is another form of debt. And when it comes to building credit in America, what is the quickest way to build? What you gonna have to do? Go into debt. The quickest way to build credit in America is to go into debt. So like I say, it's a debt to wealth society. Get with it or get lost. This is a game of Russian roulette. If I want to get a house, I would have to go into something that's called a mortgage. Mort meaning death. Gauge meaning pledge. So I'm pledging to a debt till death. Most people don't get a home until they're around the ages of 30 to 35, and then they get a 30-year fixed-year mortgage rate, and by the time they're done paying off that 30 fixed-year mortgage rate, or if they even make it to be in that old 30 years upon 35, if anything happens in between that time, if you don't lose the home or die possibly, you're gonna be paying that debt, or 9 times out of 10 you're not gonna be able to pay that debt off, because they've already calculated your lifetime expectancy is 72. That nigga, by the time if you do pay it off, you can be damn near dead. The only way we can diffuse the momentum of this debt wealth society is if we inherit wealth, and our children can inherit wealth in the form of credit, and that's what we're gonna be getting to. Every generation must make a sacrifice for the next, and in our case, every generation must make a financial sacrifice for the next to set the stage for the next. And that's our issue. We too damn selfish. We take too much pride in being poor. We take too much damn pride in being broke. And we selfish to set ourselves up financially to set the stage for the next generation to succeed and propel us. So when it comes to building credit, you want to get you a secured credit card to start off with, because the goal is to get 2 credit cards, right? So you want to get a secured credit card that you can fund yourself. You go to your bank, Capital One, Chase, Wells Fargo, whoever it may be. Tell them you want to get you a secured credit card. You want to start all over. Most of your secured credit cards, they're gonna make you put down at least $500 per every secured credit card. So you want to take them at least 6 to 7, at least just take yourself off the radar. So I'm telling my homeboy now, you have bad credit, nigga. Go and get you a secured credit card. Fund it yourself, and then wait about 6 to 9 months or so after you've been exercising, paying yourself back off of what you done spent. And let me tell y'all this, you should not be using your debit cards to pay your bills. You shouldn't be using your debit card to go get gas. You shouldn't be using your debit card to go and make big payments, such as rent, things like that, car notes, stuff like that. You should be using your credit card to build your credit up. So let's say if you do go and fund the secured credit card with $1,000, okay, you know that you want to stay within, you want to treat this with the same rules as if you would if you got a credit card from the bank. You want to stay within the 15% criteria of each credit card. And what they do with credit, they calculate the whole credit circle. So you have to keep in mind that when I get 2 credit cards, I want to keep the 15% criteria of spending on each one, because 15 and 15 is 30, right? And a lot of niggas, what they'll do is they say, well, all right, well, these cards, they're 30% together, so that means that I can go and spend 30 on each one. No, that's not what that means. 15 and 15 when it comes to 2, all right? So 15 on one, 15% on the other. So if you get $1,000, fill the card up with $1,000, or you get $1,000 credit limit, that's meaning that you do not or shouldn't be spending no more than $150 on that secured credit card or that credit card, because you got a $1,000 limit. That's 15%. So $150 is what you shouldn't be spending no more of. So let's say you get into a situation where you got 2 secured credit cards, or you got 2 credit cards. And I always tell people, on your credit cards, you want to make sure that you have them set up with a balance transfer option on each one of them, so you can allocate funds from one to another. And with you exercising these types of things, doing that, that's gonna tell the credit bureau, hey, this man or woman is playing chess off the board. Let's boost them up. So this is how that game goes. Let's say you got 2 credit cards, right? And you have a $150 limit on each one of them that you can't go over. And let's say you got some jeans or outfit or something that you need to go get, and you in a hurry and you need to go get it right now, and you ain't got cash on you, and you won't use your credit card. All right, so let's say that the purchase total is, let's say it's $200, but you knowing in your mind, I can't spend $200 on this card. I will go over my 15% criteria. I can only spend $150. So what you're gonna do is, with those 2 credit cards, because both of them have the balance transfer option, you're gonna allocate $50 of $50 worth of funds or credit to the other credit card to suffice for the amount that you would spend if you go over, so it could accommodate for that, so to speak. So you'll take that, if you're gonna spend 200, you can take the 50 from over here and put it over here with the 150, and then you got your money to where that you can spend without taking a hit. Because if you go over that criteria limit of the 150, you're gonna take a hit from the credit bureaus. So that's what you don't want to do. You don't want to go over your limit. And even though it is okay to go over your limit sometimes, let's say you spend 200, 250 and your limit is 150. You can do that and pay it back, but I wouldn't pay it back the next day. Wait about 2 to 3 days to pay it, because you want to let the financial bureaus know that you know what you're doing, and you knowing that you playing the game, playing chess off the board. So with them seeing that, all right, he ain't pay it back the next day, he paid it back a few more days later. Because if you do pay it back that next day, you're gonna make yourself look like a liability, and that's not what you want to do. For a person that has bad credit like my partner Cordy, I told Cordy, go and get you a secured credit card from this bank, and go get you a secured credit card from over here from this bank, since you can't, or you're not eligible to get a credit card issued to you from the bank yet, because your credit score isn't up there yet. So you're gonna do these things I'm telling you with the secured credit cards to build yourself up, right? And you can extend the credit limit on your secured credit card because you're funding it, right? So you can go and put $5,000 on there and then turn around and exercise like I told you and pay yourself back, and do that same things for a good 6 to 8, 9 months, 3 quarters. Do it for 3 quarters, 9 months. If you're not relevant with quarters, 3 quarters is 9 months. So that's what you want to do to build yourself up until you can go into the bank and say, all right, I want to apply for a credit card, or let me get a line of credit. That's the things that you want to do to build yourself up to start off with. And you don't want to get no more than 2 credit cards, y'all. Y'all go into all these different places that y'all shop at or tend to love to spend y'all money frivolously. Walmart, JCPenney's. I used to be a JCPenney employee. I used to be on the floor making people or enticing people to apply for credit. And I'm gonna tell you the game. This is what these people do. They know the people to target. Me personally, I would target young people because I know young people don't know nothing about credit. Or I'll target people that I feel as though is living on or below the poverty line just by looking at their stature when they come in the store, just observing their whole image. I will come at them. Hey, you can apply for a JCPenney credit card today and get 75% off if you're approved or not. So I know on my end, I'm going to get the count for them being approved or not as a credit application. And if they do get approved, hooray for them. If they don't, I don't give a damn because I win regardless. So you don't want to get trapped into that. Don't be enticed, because people tend to apply for these cards in places that they tend to spend their money frivolously. But I still say on the flip side, if you are spending your money a lot in these different places, go and get you a credit card there. If you like to go and shop at Ross consistently, or you like to go and shop in Walmart consistently, go and pay and get your groceries on your credit card. I wouldn't say get clothes and shoes of things of sort on your credit card, because it's gonna make you look like an uneducated consumer. Again, like I'm telling y'all, frivolous spending. You don't want to do that. You want to do that with liquid cash. All right, so don't try to do that with your credit card. It's gonna make you look bad. So if you're using, or you're going to spending all your money at these different places, Target, Walmart, you know, all these different grocery stores, you should apply for a credit card there and use it for grocery purposes only. Yeah, you should do that. Not using your credit card does not help you build credit. Using your credit card does not help you build credit. But in the manner in which you're using your credit card and keeping it consistent in a positive habit helps you build your credit. So what do I mean? Not spending your money on frivolous things on your credit card. Spending your money on things that will impact your credit card score in a positive way will help you build your credit. Paying your credit card bill before the reporting date, Because you know there's two dates on your credit card. There's reporting date and the due date. The due date they tell you about, the reporting date they don't tell you about. Paying it before the reporting date will help you boost your credit card score. Not paying it on the reporting date and not paying it on the due date will make your credit score go down, of course. Not paying your bills or your credit card bills or your regular bills will impact your credit score, because when you don't pay your regular bills, they send them to collection after a period of time, and collections stay on your credit report for 7 years. But you got to keep in mind also, guys, that you're not allowed to owe anyone in America, especially a financial institution, after 7 years. That's why after 7 years the debt rolls off your credit report. But you'll tend to see that you'll hear or have people calling you saying, hey, I see this debt on your credit report for $500. Give us $230 and we'll wipe it clean for you. That's crackhead shit. That's called predatory lenders. You don't want to do that. Don't sell your debt. And it's really illegal to sell your debt to a third party in the first place. Think about that. Y'all, check this out too. Did you know that you can freeze your credit report when you feel as though that you finna take a financial hit or a loss on your credit report? You can freeze your credit report until you get things set or straight. You know, as far as whatever that's finna impact you, you can freeze it until you take care of your business and get it straight. And then once it's over and settled, you can unfreeze your account and everything will continue. So in my earlier videos, I mentioned that you want to stop self-snitching on yourself when it comes to credit bureaus. What do I mean by self-snitching? When you have a debt on your credit report that you paid off, and a lot of us tend to call up the credit report or contact them some type of way and say, hey, I paid off this debt. I need you to make that known that I paid off this debt on my credit report. And they'll make it be known too. But you're not knowing that every time it shows that you've paid off a debt on your credit report, it makes your score go down. Because it's just like this. I'll give it to you in street terms. Let's say you got somebody that's gonna lend you or has lended you 5 bricks in the street. Or let's say it's 2. And it takes you 6 months to a year to pay them people back, but you paid them back. And you'll be happy that, all right, man, it took me a while to pay you back, but at least I paid you back. I paid him back though. So when it comes time for you to get another loan or somebody to lend you some more bricks, you think that somebody else that isn't other than that person, because 9 times out of 10, that person's not gonna wanna lend to you anymore because you took too long to pay them back. So you think anybody else in the hood that may possibly have bricks that you can go to and say, hey, let me get a loan and I'll pay you back ASAP. Do you think they're gonna want to lend to you? Because they know that the word around town is you borrowed from old boy down the street, but it took you 8 months to a year to pay him back. You ain't finna hold my money up that long, nigga. So it's the same thing with the credit game. It's better for someone to know that you wasn't in debt than know that you were in debt at all. So don't go on there telling them, hey, make it notice that I paid this debt off. What you want to tell them is, hey, I want to get this debt stricken from the record. With that exact verbiage. I want this debt stricken from the record. And with collections, I know a lot of y'all have them, and y'all go to these people and get y'all credit, pay these people to get y'all credit clean and wiped, and you get your score back. You see your score went up a little bit, but you still got collections on your report that they can't take off. They can't eliminate that. If you did it and you owe, can't nobody take that off. The only possible way that you can possibly get that taken off before 7 years is if you go to them and ask them, like I'm telling you, to take that debt off and restrict it from the record. That's one way, but they still have options to do it or not. So on the other hand, you got credit card redlining. I tell y'all that your hood has to have credibility. Does your hood have credibility? And us being young people, we love to pride ourselves of being from an area because it's so rough and tough. But does that area have credibility? 9 times out of 10 it doesn't. Because in those areas, the poverty level is below the line. You feel what I'm saying? Because poverty begins at, for an individual, of $15,000 a year, or for a family of 4, $32,000. And wealth begins at $150,000 a year, and that person can take a third of what they're making and invest it and not be bothered financially. That's called a 5%er. So what do I mean? I'm meaning that, nigga, if you stay in the hood, you need to go and get an address somewhere in an area that's more prominent is for wealth, that's building wealth, growing wealth. It look nice over there. Ain't no potholes over there. Ain't no health clinics over there. Ain't no drugs being dealt over there. Ain't no liquor stores over there. Those are areas. Ain't no vacant homes over there. Property taxes being paid over there. Areas where wealth is being amassed is where you want to be. So I know a lot of our people, we tend to can't just go and up and move over there. Even if you can. I'm not saying you got to go over there and get a house that you can't afford. I'm saying at least get an apartment or something, or an address, a P.O. box, not a mailing address, but a P.O. box of some sort, and you have options to show that you live over here in this residential area. And when they see that, as far as the financial bureaus, they're going to say, hey, this person right here in the in crowd, let me boost them up. So something as simple as changing your address on your credit report or credit cards can boost your credit score up to significantly 60 to 75 points, because you're living in a different area and you're in a different red line, so to speak. So they can't come at you and say, hey, I'm only going to give you an X amount of line of credit because you're Mexican or you black or you Latino. They can't do that. It's against the law. But one thing they do know, and that they do electronically, it's called electronic racism. What they'll do is, they know that racists tend to live in clusters, right? So we know that whites 9 times out of 10 gonna live where all the white folks live, and the Mexicans gonna live amongst the Mexicans, and the blacks gonna live amongst the blacks, and so on and so forth, right? So they know that. So what they do is they draw red lines around these maps. And you may question yourself sometime, why do I live in this one city, but we have all these different zip codes? It's a part of credit redlining. So, and I wish I could have showed y'all this the other day. You'll see. Now the red lines is not a line that you can see. It's an invisible line, but you can see it at the same time. It's areas in Shreveport that you can ride down. That shit look like a bomb been dropped from Baghdad on that bitch. Trash everywhere, bums walking around everywhere, tow up ass buildings and vacant homes and shit. And then you arrive 5 minutes down the road and you see a big ass mansion on the block. And then you got a mall over here, and you got banks all around, and you got food, and you got nice eating restaurants and stuff like that. It's just like it's like a night and day that you riding in. It's like you riding in hell and opening up heaven. And it's like that all across America. And now that I'm telling you this information, you'll be able to identify it. That's credit card redlining. They know racists tend to live in clusters, so they can't deny you an X amount of, or a line of credit because of your race, but they can because of your zip code. That's why when you go and apply for credit cards in stores like JCPenney's of such, they don't even ask you for your address, they ask you for your zip code. Ask you for your name, date of birth, zip code. They just want to know where you stay at, so they can know if they're going to give you a large line of credit, a small line of credit, or no credit at all. And that's what gives them the power to do that. Credit is extremely important to insurance. Why? Because if you get you a whole life insurance policy, most of us get terms. With a whole life insurance policy, you can borrow against it and attest to the credit and acquisition of medical bills, real estate. It could even be a student loan of such, to where you can borrow against the policy with the cash value and do the things that you need to do. Reinvest, pay things off of such. This is the power of credit to insurance. You do not have to be the beneficiary of the policy to do what you need to do, to borrow against it. This is real game, y'all. We got to get hip to it, because it's holding us back and keeping us impoverished as a community, as a people. This is why we are not on top financially. The difference between being rich and poor is not the money, it's the education, it's the knowledge.